I recently attended the inaugural Missing Middle conference held by the awesome guys at Sustainable Development Group. In this video, I want to share 9 key insights that I took away from this event that will help direct my development and investing in the coming years, and hopefully give you some valuable information as well as we navigate these uncertain times in housing development. Let's get into it. Thanks for watching. If you're new here, Sweet Additions is a design and consulting company helping homeowners and small developers create more housing and generate wealth. It would help us out if you can give us a thumbs up and subscribe to this channel. This event was held by SDG, the Sustainable Development Group, founded by Dave, Jimmy, and Kartik, who are leading the charge with missing middle development in the GTA. They're very generous and willing to share information freely on the development process based on their own experience. If you didn't get a chance to attend this year, I highly recommend that you check them out next year. It was a great event for myself to learn what's happening on the ground and network with industry folks who are actively working on projects. As part of the event, they had industry experts such as planners, developers, lawyers, and lenders in the space of missing middle housing. Additionally, there were numerous public officials such as councillors, mayors of major municipalities in Ontario, and provincial ministers. Now, there's valid reason to expect that politicians aren't the most helpful when it comes to making it easier to build, but at least it's encouraging that those at the policy level are fully aware and engaged, as shown with their attendance at this event. So here are my 9 key insights from the event based on the information from the speakers as well as from conversations with other stakeholders at the event. The most valuable information I found was the research that was provided by the Altus Group in Toronto, which provided several key insights. This information is publicly available on their website and the link is in the description below. First was info about population trends in the GTA, and it's expected for the next 3 years to be negative. Although this sounds alarming, it's in response to the extreme surge we saw in 2023 and 2024 at close to 300,000 a year, and it's expected to go back to normal levels starting in 2029. This is important to note as we are at record low construction starts now, and when the net population begins to grow, we'll not have the housing to meet that demand. The second key takeaway was that there was a shift in the types of housing demanded by end users in the market. Going into the next decade, they project a big trend towards demand for homes for those starting families, as well as seniors looking to downsize. Based on their research, this means that there will be a lot of interest in ground-oriented housing in established neighborhoods. In their words, these households are looking for larger units, bigger principal rooms, and ground orientation integrated with neighborhoods, schools, parks, and amenities. This is exactly where missing middle housing fits. So although there is a glut of small condos in the market now, there's a lack of larger units, and as I've said before, I think larger 2 and 3 bedroom units will be in high demand in the coming years. The third key insight was also from this article where they highlighted construction costs and financial challenges. Although costs have come down from the pandemic levels, mostly from a greater supply of available labor currently, many material prices remain high due to inflation. From a project size perspective, they state that projects in the $3 to $10 million range often fall into a no man's land, which is too large for standard mortgages and too small for institutional capital. This is important to know, and if you can keep your project under the $3 million mark, this can have a greater chance of success. Moving on from the Altus data, the next key insight was from Toronto Councillor Bradford and Mayor Chow, who announced the provincial mandate to develop density around MTSA, which stands for Major Transit Station Areas. I recently did a short video outlining this, but essentially is putting forward as of right allowances for low density areas up to 4 stories within a 500 meter radius and 6 stories if you're within 200 meters or fronting a major street. This of course can be aligned well with the new major streets policy allowing up to 60 units, which is outside the scope of many small developers, but is a good sign that policy is shifting in the right direction. The remaining key takeaways were primarily from discussions with other professionals at the event. Insight number 5 is that the sweet spot for small-scale middle housing is building up to 3 stories with a basement using standard wood frame construction. By building 3 stories and under, it can make it significantly easier to meet code for access and egress, and also does not require the use of elevators and is ideal for small lot sizes. Additionally, minimizing the use of concrete and steel can dramatically reduce per square foot build costs. Insight number 6 is that despite a policy shift to make it easier to build for density, there are still many real financial constraints hindering many private developers from building. Due to the still relatively high rate environment, high construction costs, and various fees, numbers are still very tight right now. So you still have to be creative in adding value, and one strategy is to lift the value of the land through the sweat equity of going through municipal processes such as land severances and or zoning amendments. Examples would be going through a consent application to sever an oversized lot to 2 separate lots. And in Toronto, you'd be able to build up to 5 units on each lot, and in some areas, build up to 7 units on each lot as of right. And in these cases, you may be exempt from all development charges, which will make a huge difference in your bottom line. Imagine taking a large lot with an old single-family bungalow, severing the lot and building 14 units in total. That's incredible value creation. Another example would be to try to go above and beyond the bylaws through a zoning amendment. For instance, if you had a large enough lot that may not be suitable for a severance but can easily support 10 units, you can ask for permission through a zoning amendment. This, of course, is not guaranteed, but if successful, can really boost the value of your land. Insight number 7 is that CMHC's MLI Select program, which has been instrumental in helping to fund both the construction and long-term financing of missing middle projects, is going to be tightening. It will be more difficult to get the financing that is needed to make many projects feasible. It's unlikely that most projects will be able to achieve 50-year amortizations and 95% mortgage loan to value. In many ways, this program has been very successful in getting projects off the ground, especially in markets such as Alberta, and word is that this will be harder going forward. Affordability is a key component of the MLI Select program. We recommend running a conservative financial pro forma, as expected rents and time to fill can take longer than anticipated. Many developers are making the mistake of projecting rents that are too high, and this can really affect the feasibility of the project. The next key insight is that government policy is continuing to target rental housing development, as we can see with Build Canada Homes. Of course, rental housing is much needed, but this leaves a gap for home ownership options. Many younger Canadians and new permanent residents and even downsizers that were identified as a large demographic in the coming years are looking for ownership options. For those of you who are able to build middle housing units that are larger and can be turned into condos so that they can be purchased, I believe will benefit in the long term. This strategy of condominiumizing small building multiplex units is gaining traction and I believe will be a profitable housing option. The final insight was more my own observation, but was confirmed as I was speaking with other builders and developers. And that is when creating multiplex housing, it's much easier to build new than it is to convert an existing building. Over the past several years, I've helped many homeowners and developers convert their single-family homes to 3 and 4 units. Now, although I think this is a great product once completed, the homeowner really needs to consider the cost and time to do such a conversion. The challenge is that once you go to 3 units and higher, the structure is now considered a small building under the building code. And this provides very unique challenges when converting what was originally a single-family home, especially around aspects such as fire separation between units and emergency access and egress. Of course, it doesn't always make sense to just tear down a perfectly good single-family home to build a multiplex, but just remember that new construction is much easier to build compared with conversions. There were numerous other insights, but I'm going to stop here for now. Of course, we'll continue to share more as we continue to build and learn from others. So in summary, here were our key 9 takeaways that we'll be considering moving forward. Number 1, net population growth is expected to be negative for the next 3 years, and we have record low housing starts, which means that there won't be adequate housing when the population growth happens. Number 2, there's a trend towards demand for larger units in ground-oriented neighborhoods. Number 3, costs are still a roadblock and staying under the $3 million mark is ideal for small-scale projects. Number 4, there's plans to allow more density around transit station areas. Number 5, up to 3 stories is ideal to keep costs low. Number 6, creative land value adds are key to profitability. Number 7, the CMHC MLI Select program will likely become more difficult to qualify for moving forward. Number 8, there will be a supply gap in housing ownership options, so this creates an interesting opportunity. And finally, number 9, consider building new multiplexes instead of converting existing homes, which is a more straightforward process. Again, we encourage you to attend this event in the future. It looks like they will be holding one of these again in Toronto next year, as well as Vancouver. Hopefully this was helpful for you. And as always, thanks for watching and we'll see you in the next video. To learn more about the Max Suite strategy, download our free guides at suiteeditions.com and get started. And if you enjoyed this video, here's another great one for you.